you know, all right, hey, good afternoon, Green Traders. Dan here, and we have a special guest, Stan, who is one of our loyal subscribers, and he was sharing with us a trade history on Alta with some option trades and hedging and a big long history. And so instead of me, when I get an email like this, my brain kind of shuts down. I'm like, hey, let's do it in real time. And so we invited him in here, and he has the screen. These are his notes. This is what he emailed me. And so what we're going to do here together is let Stan walk through from beginning to end on every single thing he did on this trade and why. And I'm going to just be an innocent observer and give my comments in real time. And you all are welcome to do the same and ask questions. And this will be a little educational situation. So, take it away, Stan. And I'm kind of thinking, yeah, maybe you give a quick summary of what you did here, but I think it's more important if you show us the charts and the date and then just verbalize the actions that you did. But take it away.
So I did the Alta trade that Dan recommended on March 2nd. It was a 367.50, 357.50, 10 wide full credit spread.
Okay.
And, he recommended 75 cents. I got 75 cents, which is $750. I did that on Wednesday the 2nd. And then it closed on Wednesday at 381.50. So it was heading in the right direction. So everything looked good. But,
all right, so Stan, let me interrupt. So I think here's where it's more valuable for you to add your commentary, but for us to look at a chart. So you can either show yours or I can show mine. And
if you want to pull your chart up, that would be fine.
Yeah. And then you just tell me the date and you give me the commentary. And I remember the trade. So let me pull it up.
So this was Wednesday, later in the day on Wednesday, March 2nd.
I can tell right. Oh, that was way back here.
Yeah, early March 2nd. And I think going back a little further.
Yeah. Okay, so right here.
Yep.
All right, so right there, we sold a way out of the money put spread. What strike?
367.50.
Okay, how many days to expiration?
2 days to expiration.
Okay, so that was a good, I see the chart and yeah, so that, all right, keep going now.
Look, it looked like a nice trade. So then on Thursday, Alta ended up down, pretty good that day, but at Thursday it closed at around 373 something. So still in good shape.
Yep, right here. Yep.
Got it. But the issue I had was that I had forgot that my wife had set up a go visit the cousins day on Friday, which is the day of expiration.
Okay. This day.
So Thursday night, after it had gone, it was down like 6 or 7, or maybe, I think it was down maybe 780 or whatever on Thursday. So Thursday night, I said, well, if it goes down under 370, I'd like to roll this, but how do I roll it when I'm not there? So I tried to come up with a price that it looked like I could roll it to the next week, the next Friday. And I thought, well, let me try to lower my sell put to 362.50 instead of 367.50, and it went to a 5 wide instead of a 10 wide. And it looked like I could get a little credit for that. So I put an order in to buy the new roll spread at I think I put it in at $1.81. That's what I got filled at. It was $1.81. And I also tried to put the price in of where I would sell the one that I was currently at, but that's really hard to do when I'm not at the computer. So the first lesson I think I took from this is don't put a spread on if you're not going to be there when it's going to expire. So when
unless it's liquid, and you can do a contingent stop order, but it has to be liquid, or else you're going to get whacked in the wide market out.
Yeah, and I can't do a contingent stop order, so I probably shouldn't have done it, but so I was occupied all day on expiration day, visiting two different cousins, one in Clearwater Beach, another one in Claremont, and so then at the end of the day, I looked and I saw that it closed just under the 367.50. I think it ended up closing at 366. What was it? 366.
The 366.76. Yeah. So
Yeah.
like 75
Yeah, so
in the money. Yep.
So I ended up getting assigned 1,000 shares at 367.50. So that was a little bit of an ouch.
A day before expiration?
No, the day after, the day of expiration.
Okay.
I saw it in my account on Saturday morning.
Got it.
Yeah.
All right.
So I looked like the price was going to be such that I figured I was going to had to buy the 1,000 shares, which I did. But the other thing I didn't anticipate is that I also ended up getting filled on what I was thinking was going to be my roll spread. So that was another 1,000 shares or another 10 contracts that I was at risk at on the roll spread.
Wait, but if it was a roll spread, then that would have been the following week's expiration. So how'd you get assigned on that?
No, I didn't get assigned. I ended up buying a trade, putting on that spread.
Okay, got it. So assigned.
Yeah, so now I'm essentially have 1,000 shares that I own, and I have this other 10 contracts for at risk for another 1,000 shares.
Got it. You got a new put spread on. You got two bullish positions.
Yeah, exactly. And so then Monday morning, I saw that I was getting a Fed call on my account. So before the market opened, I called my brokerage and said that, well, I can either send them $200,000 by Wednesday, or I could sell approximately 603 shares by 2 o'clock on Wednesday. So fortunately, Monday morning, Alta opened up a little bit. And I put an order in to write. I'm sorry. Put an order in to sell 700 shares, and I put an order in at 368.50, which was $1 over the what I paid for them. But I actually got like $1.27.50 more than what I paid for them. So that was good. I reduced my risk down from 1,000 shares down to 300, and I met my Fed call. So I was feeling pretty good about that. But then that day, are you highlighting on that day? It just went crashing down on that day. That would have been March 7th. Well, you see on March 7th where it
March 7th? No. Not March 7th, 17th?
Yeah. No, 7th. So on Monday, March 7th, I was
got it.
signed on the 4th. The weekend was the 5th and the 6th. And on Monday, the 7th, it opened up a little bit, and then it just went crashing down the rest of the day. And it closed on the 7th at 351.
Yep, I see it right here. This ugly bar.
Yeah, that was ugly. So now I had 300 shares that I bought at 367.50, and I closed that day at 351. So that's $16 that I'm down on 300 shares. That's $4,800. And at that point, I would be at max loss on my other spread.
Well, so let me interrupt. You're only at max loss at expiration. But I'm saying this for education for other people. Yep. So if this were Monday, and even though it were at the lower strike price, I guarantee you, and I'm not saying you'd want to do this, but let's say it was a $10 wide, you could still probably get out at $7, because you still have $3 of time premium for the 5 days. But continue.
Yeah, so I could have possibly bailed on it, but I didn't. I just the next day it gapped up a little bit and closed up for the day, so that was feeling pretty good on the next day, and that was the 8th. And then on the 9th, it actually gapped up again. And so then I put an order in to do covered calls on my 300 shares that I still had. And I got $9 for that. I did a strike price of $367.50, which was my the price that I was assigned at. But I also got $9. So that was $2,700 on those 300 shares. So that was pretty good.
Yeah, no, I hear you. You know, and I didn't want to interrupt you earlier, but using bar by bar analysis, this ugly 180 reversal, that would have had that would have sent shivers through my spine. You know, in terms of rolling, like we only like to roll if the pattern supports a roll.
Right.
And that I would have been in hope mode for one more DTE, you know, expiration. And I think you got lucky on this bounce. You got lucky because the pattern didn't suggest that.
Yeah, no, I'll take a little bit of that luck, and I'm glad I got it, but
right, and we're doing you know, verbal trade reviews, so you know, you've been in the business for a while and you're successful, so you don't, you know, you don't do stupid things all the time. But yeah, that's what trade review is. You're out of the trade, you got a clear mind, and it's like, all right, what did I do right, and what did I do wrong, and how can I revise my trading plan to get better?
well, I felt good that I got rid of 700 shares at a little bit of a profit. So my risk was now good, where I
Without
owned 100 and I still had the spread, which had a limited loss ability.
Without a doubt. There's so many times in the green room we say, you know, we talk about, you know, fun analogies, this and that. We say, don't look the gift horse in the mouth. You know, we came back and we're able to get out of something, break even, that went way against us because of a disaster gap or whatever the case, and we take the gift and get out.
But I
All
still
right.
have the rest of the week to still have that spread to deal with, and I had the call written on the 300 shares, so that gave me $9 more that I had wiggle room on. So
I know what that means, but explain it to the listeners. What does $9 wiggle room mean?
well, I got $9 for the 367 covered call. So
Right. So he
was above 367.50. They would just take my 300 shares back at a break even, but then I still had the $9 or on 300 shares of three contracts, so it'd be $2,700 that I had in my pocket anyway. That's not going away. But
right. So John, it's really not averaging down per se. It's more of lowering your cost basis into strength. He sold calls against it and lowered his cost basis. So that's the cushion that he's talking about. That I took in another $9 by selling an out of the money call, and I'll take it because when Stan and I are saying cushion, because that's how we teach it in the seminar, it means at expiration it can go $9 against you and I'm still break even from the point of when I sold the call premium, right?
yeah, I could have not got called out, and maybe the price was around 365 or 360 or whatever, and I could have sold it the next Monday at 365 and still at a profit. But fortunately, I did get called out, and I got the 300 shares called out at the end of the day on Friday. So now I was out. Those 300 shares were clear of my account, and then also that spread. The 362.50, 357.50, I was, easily that expired worthless.
Exactly. And that's an assignment of your long shares that you are happy to watch disappear. It's like, thank you so much. And I saw your opening screen. What the net of all this mess was what, $6,500?
Yeah, 61.50 is what I ended up. So I was going to be happy with the 2-day $750 spread, and just a nice 2-day trade. but it went against me. So I ended up making about $892 on the 700 shares that I sold first thing Monday morning. And then the other 300 shares, I wrote the covered call and got $9 on that. So that was another $2,700. And then that 362.50, 357.50 that I got $1.81 on, that was another $1,800.
Yeah, so, so there's, one obvious compliment I'm going to give you is, you seem to stay cool. You use the charts to manage it with option strategies. And so let me just ask you a kind of, somewhat unrelated but unrelated question, which is, you get our subscription services. How have you personalized your own trade management to the trade ideas that we give you? Like are you in your own comfort zone where you know what you're doing? We're an idea generator. You take the ones you like, you dismiss the ones you don't like, and you know how to manage them on your own?
Yeah, I think so. I think I try to work myself out of trouble that I got in. Yeah, I'm still in trouble on the Netflix trade that you did back in the end of January when the earnings came out pretty good, but the stock still got killed. So I'm
Yeah, no, I remember that one. Yep.
I'm still sitting with 800 shares of Netflix in my account.
I remember that one clearly. We actually, I think, rolled it twice and were able to get out of that thing at a profit. I remember that disaster.
Yeah, and I didn't, so I must not have followed everything exactly. So this one worked out well. That one I'm still in hope mode on, and I think Netflix is going to get back up over 400 again, and I think I got a $429 break even on it, and
yeah, this was it. We got caught in this. We were rolling it here, and we got out right in the rally. We got out at a profit.
I didn't. So
okay.
Then it went down, and I'm still sitting on
it. Okay.
I'm wanting to do a call on it, but right now I'm not getting much for it. So I don't want to do a call at a strike price that's going to be under my break even. So I'm kind of waiting for a rally. We got a little one.
Well, okay, but let me add my comment to what you just said.
Sure.
I don't fully agree with what you said. I do in concept that, hey, my cost base is 429. Why do I want to sell at 400? I get assigned, it's at a loss. But just listen to what I'm about to tell you.
Okay.
Let's say this takes out today's low tomorrow. Okay.
Okay.
I would sell a call option over the week's highs. Just round up, call it a 390.
Okay.
So then if it goes down, you got your premium at 390. That does not mean that you have to let your stock get assigned at 390. If it then turns out to be a little breakdown failure and trades above this bar's high, then you close it. You close it. So even and you'll close it at a gain or a loss depending on how many DTEs there are, but you will net still be profitable. Even if you stop out of that short call at a small loss, the gain on the long dwarfs it. So kind of in a nutshell, don't get hung up of, oh, my cost basis is up here, so I'm not going to sell covered calls around it. Trade covered calls with the chart bias. That's my point.
Okay. Yeah, I've been preparing. I've been looking at doing a covered call the last couple of days after we've had this rally in the last week and a half. Much better price today than it was 7 or 8 days ago.
Okay. All right. Well, no, that was awesome. Yeah, the market is perking here. Any questions for Stan? He's a real trader. He's there in the trenches. We love having other people give their views and experiences, so it's not just Greg and me all the time. So,
I have a thought.
Shoot it.
Just based on these two trades, is that seems, Sam, you're just not going to accept the loss at that time. Now, the question is, there's two variables with that. what kind of stocks are they? So you mentioned that Netflix, that's going to come back at some point. Well, that's a belief. We've seen, and maybe it will, but we've seen stocks that I thought believed would come back and they never did. So if you're going to trade these kind of things where it's like, all right, I'm not going to adhere to the settings, so to speak, the stop loss, and you're going to manage it by lowering costs or whatever you're going to do. There's two things you need, over time, if you ran into a bad patch, say in the markets where, several things dominoed on each other and you started adding to positions in this way, not to incur the loss, do you is there enough money to continue to do that and hold these things and roll them, because that could kind of lead into, now I don't have more money to add to these things or manage them, and you're just sitting. So it could be, and if I'm not thinking, if I'm thinking not really what, was what you're doing, you can say that, but I just see it as potentially a dangerous situation where you put on a spread trade and then you start doing, adding to buying the stock or doing other option trades. And then it just could become a giant mess and holding things for a long time and then not having maybe enough equity to now continue to manage or add to other positions.
Yeah, that's a point well taken, because I think that's the biggest issue I have is staying with things too long. Fortunately, I have the capital to be able to do that, so that helps, but it also is tying up capital too.
Right. It ties up capital. It ties up your attention with other things that you could possibly be doing. So it's definitely something to consider. And, credit spreads are a great vehicle for income. The reward to risk, as we all know, is skewed very badly. And so we look for these things that are very far away, but sometimes they don't work out. And it just could become a bad situation. So for myself, I look for things that I believe to be no-brainers. Some of them, they aren't, but as much as I can find a no-brainer, which becomes much more difficult than finding things that are like, it's okay, but the ones, like that don't turn out well. Yeah, I mean, so, and you got to look at these things and maybe ahead of time, we don't want to think negatively about a trade, meaning, well, what if it doesn't work? Well, but maybe they're, and I'm just speaking while I'm thinking here, maybe if we entered a trade where we saw a second level of support possibly, and it's like, well, if this didn't work and it went against me in some way, is there the possibility that I could add to this or buy it, or meaning, think it ahead, or is this just like something, no way would I ever want to hold on to this thing if it didn't work out? And as time goes on, if you approach things in that way, is like, I have these variables that I might consider, you'd get experience with that and then find out whether that's something that I can do in the future, or you might find out it's something I really don't want any part of, and I'll just better off biting the bullet and killing something. Or, the discussion with Dan yesterday, which he's going to do a video over the weekend, which I'm really looking forward to, is in our management to say, look, based on this technical level on the chart that matches with a 2x loss, it makes sense to us as chart traders, as well as, a 2x loss, whereas in the past we were saying, 2x is in the middle of nowhere. And it's like, this sucks to stop out. But yeah, so it's good.
Now, the other one that I'm still in too is the Qs from January, and that's a 370. And I think one of the things I've learned is, or I think I've learned is that I don't mind as much being in the queues, because the queues are gonna go back over 370 at some point in time. The queues can't go bankrupt. You know, Netflix could go bankrupt, it could go to zero.
True.
I still think that, that it's a good stock. Analysts have it at still over 500 in the next 12 months. So I think I can wait it out and still get to the break even. But I like the idea that Dan had mentioned about grabbing a covered call now, even though it might not get me to break even, but then I can still do another either credit spread or whatever to get the rest of my money back, to get back to more.
Oh, two things. I believe the queues will eventually go up as well. However, if at the in the year 2000, they went down 90%.
Yeah.
So understanding that there is the potential that, yeah, they'll come back. Will I live that long? Right? Because
Yeah.
in 2000, where they went down to, it took quite a number of years for them to come back there. And I was personally in a situation when 9/11 happened. I was long the queues from the prior week. And then the next day they opened up, and then they stopped trading and went down. And I had the same thought that you had, was, I'm not taking this loss, when the markets opened up a week later, and then they tanked and went much lower. And it's like, I'm not taking this loss, because it's the queues, it's not a stock.
Right. No,
And
that's a
I've
good
been in
point.
situations where many years ago, I was long IBM, and it went through the stop, and I didn't take the stop, and it went down, and I was like, okay, it's IBM, it'll come back. And it did come back, but it was like watching this thing, and I think it took a year for it actually to come back. And, that year of dealing with that, watching it, it's unpleasant.
And in the meantime, you got a lot of capital tied up that you can't do anything else.
Exactly. So,
So,
all right.
well, it's been real helpful. I think that being able to comment on the actual trades, and I'm glad we could jump off onto the Qs and the Netflix too, because those were some ones wanted feedback on.
All right.
Hey, Stan, yeah, thanks so much. Yeah, I typed here right when Stan was talking, because I'm always looking at my 6 screens, and look at this, right? This wide range igniting. I said marijuana is popping. Wow, look at Tilray Dog, GRW